everyone. I got this question from a fellow tax pro for her client. Can suspended passive losses be applied in a like-kind exchange? So let's break down this complex topic for a clearer understanding. First, it's crucial to understand the concept of suspended passive losses. These occur when there's more passive losses than passive income in a given tax year. They don't vanish. Good for us. Instead, they are carried forward for future offsetting against subsequent passive income. Now, when we talk about like-kind exchanges governed by Section 1031, we are looking at a mechanism that allows the deferral of recognition of gain or loss when exchanging similar property. This deferral is based on the nature and the use of the property rather than its specific characteristics. Moving on to our first sub-question, what happens to suspended passive losses in a like-kind exchange? Well, these losses associated with the property being exchanged don't disappear. Instead, they seamlessly carry over to the replacement property. This is in accordance with IRS rules that dictate the taxpayer's basis and the replacement property mirrors that one of the relinquished property, including any suspended passive losses. Check out the resource section. There's a link to the IRS passive active loss audit technique, so it gives you a little bit more information what the IRS is looking at when they're looking at passive active loss. The next question is, can the losses be offset against income from the exchange itself? Well, the answer is no. Due to the non-recognition nature of 1031 exchanges, there is no income to offset against. This is a key consideration, given that in like-kind exchanges, there is typically no immediate taxable gain or loss recognized. Section 1031 affords taxpayer the ability to defer the recognition of capital gains, including those linked to suspended passive losses. Subsequently, there is no income against which the suspended loss can be applied during the exchange. Second, if the 1031 requirement are met, the taxpayer does not have any choice but to defer gain or loss in the U.S. versus Benin case. However, to the extent of boot, which is taxable income that was received, and the activity is passive in the year of the transaction. So remember, it was suspended passive losses. Okay, it's not active loss, it's passive losses. So it have to be net again passive income, right? So the activity has to be passive in the year of the transaction. So the passive income can be offset with passive losses. This is because a passive loss may only be deducted against other passive income, or in a fully taxable sale or exchange to an unrelated party. In summary, while suspended passive losses might be present in like-kind exchanges, their application and release depend on specific circumstances. Whether it's the carryover to the replacement property or consideration involve taxable boots, these nuances underscore the complexity of navigating passive losses in the context of like-kind exchange. So if you have suspended losses, you really have to sit down and look at your whole situation and do the calculation, right? Because 1031 exchange is not good for situation when you're gonna have a loss on the sale, because you cannot deduct the loss in that year. You have to carry it forward, so you cannot take advantage of the loss right now. So if you have a loss in a 1031 exchange, or you have suspended passive loss, you need to do the calculation. You need to look at how many capital gains how much of the capital gain tax that you have to pay, and net again these losses to see if you can deduct it. If you can deduct it, net out zero or close to zero or small amount, then you might want to just pay the tax or just do a regular buy and sell and get rid of all that stuff, right? This has to be before you started the exchange, right? Because if you already started the exchange and all the requirements are met, you cannot say, oh, I don't want to do a 1031 exchange anymore. I want to do a regular buy and sell. No, you cannot, because you already met all the requirements for the 1031 exchange. So I hope it makes it a little bit clearer. If you have any question, let me know in the Q&A section of the course. So I hope you like this. Give the video a thumbs up. Thank you.